Alibaba is buying back billions of dollars of their own stock. Ultimately, these buybacks increase current shareholders' ownership in the company, as well as they help boost some key metrics like earnings per share. So in this video, we will take a look at these buybacks, the effects that they could have on the company, and give a prediction of where the stock price could be going if these buybacks continue, as well as we see a change in valuation. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. We've covered Alibaba many different times on this channel, and they have had an incredible last 5 years. The stock saw an amazing run in 2019 and 2020, peaking out at over $300 per share. However, after concerns came up around potential delisting of Alibaba from the New York Stock Exchange, as well as issues throughout China, the stock price has fallen an incredible 75%. And this move down is despite the fact that their top line revenue numbers have increased substantially in the last 5 years. Back in 2019, they were bringing in around $71 billion of trailing 12-month revenue. That has since grown all the way up to $130.3 billion of trailing 12-month revenue. Over the course of the last couple of years, it's basically flatlined. We haven't seen a lot of growth on their top line. However, it is still a massive increase that we saw in a very short period of time, and a lot of businesses across the market have not seen incredible growth in terms of their top line over the course of the last couple of years. There are a few exceptions to that, but there are also a lot of businesses that have really seen this same flat line of revenue as they saw a very large pull forward in demand in 2020 and 2021. Net income is where things are a little bit more shaky, more up and down. In 2020, they peaked out at a net income for the trailing 12 months of $24.7 billion. However, over the next couple of years, they saw their net income fall all the way down to $2.45 billion. It's since recovered slightly, but is still sitting at less than half of where it was in 2020. And with the stock trading lower, the company recognizes that now is a good time to increase their buybacks. And here we can see their shares outstanding. In 2020, they peaked at a shares outstanding of 2.767 billion shares. They have since decreased that number all the way down to 2.545 billion shares outstanding. And over the last couple of years, they have consistently decreased their shares outstanding year over year by around 3%. And even more recently, they are looking to ramp up their buybacks in a more significant way. Earlier this year, Alibaba approved an additional $25 billion for their share buyback program. And that's on top of them spending $4.8 billion in the most recent quarter on buybacks. Keep in mind that just because they approved $25 billion of buybacks doesn't necessarily mean that they are going to spend all that. However, at the current rate, this would fund their buyback program for the next 5 quarters. And with Alibaba's stock price down 20% from its IPO, I don't think that they are going to be slowing down their buybacks anytime soon. So after going over all of that, let's dive a little bit deeper into some of these numbers. In Q1 of 2024, they bought back $4.8 billion worth of their stock at a share price of around $75. That's an estimate from what we have seen Alibaba trade over the course of the last 3 months or so. That means that they repurchased 64 million shares, and their shares outstanding is currently sitting at 2.5 billion shares. So this first column of numbers are all factual numbers. These are numbers that are pulled from Alibaba's most recent earnings report. The rest of these numbers, however, are estimates. So I am estimating in Q2 of 2024 that they will spend around $4.5 billion on share buybacks. In Q3, $4 billion. In Q4, 3.5, and then so on and so forth. This second number is the share price. So what we have seen over Q2 is similar prices to what we saw in Q1. So I'm estimating that the share price that they would be buying back these shares at is still around $75. I have it increasing to 80 for a couple of quarters and then 90 for a few quarters. And we can see again how that changes how many shares they repurchase, because all we are doing for this number down here of shares repurchased is taking the amount of money that they spent on buybacks and dividing it by the share price. And then all we're doing down here for shares outstanding is we're taking the previous number minus the shares repurchased in the next quarter, and that gets us our shares outstanding. So we have it decreasing all the way down to 2.3 billion shares outstanding by the third quarter of 2024. 2025. The first question you should ask yourself are these estimates correct or even realistic? The first gut check that we can do is we can look at the next few quarters and come up with a total of buybacks. And if we add all of these up, this comes out to $20 billion of buybacks. Like we just talked about, Alibaba approved $25 billion of buybacks. So this is definitely possible for the company to achieve these numbers over the course of the next year and a half. The second gut check that we can do of these numbers is see the percentage decrease of shares outstanding year over year. And if we go from Q3 of 2025 to Q3 of 2024, that would be a 5.45% reduction in shares outstanding. And when we jump back to their shares outstanding, we can see that most often they're decreasing their shares outstanding by around 3% year over year. However, at the end of 2022, we saw a decrease in their shares outstanding of almost 5%. So 5.5% is not too much more than that. And during this time period, Alibaba was trading at prices that are not too dissimilar to what we are seeing today. So ultimately, what we want to do with this new shares outstanding number of 2.3 billion shares is we want to come up with an EPS target for where the company's EPS will be at in Q3 of 2025. And what we need to do that is a net income number. What I have in here is $18 billion. So if you remember back to this net income graph, we said that Alibaba's trailing 12-month net income was sitting at $11 billion. However, just a couple quarters ago, they brought in $18.5 billion of net income. And just a few years ago, they were bringing in anywhere from $20 to $25 billion of net income. So personally, I believe that China's economy is going to turn around and we'll start seeing Alibaba get back to these numbers of around 18 to maybe even $25 billion of net income. So when we take their net income of $18 billion and divide it by their new shares outstanding of 2.3 billion shares, that gets us an EPS number of $7.84. And we can do a gut check of this number as well, looking at analyst expectations over the next couple of years. For Alibaba, they have an average EPS estimate of $8.22 for the current year and $9.27 for next year. So this is actually a low estimate compared to what analysts are expecting. If we plug in $20 billion of net income, we get an EPS number of $8.71. This is a lot more in line with what analysts are expecting. So that means that over the course of the next year and a half or so, analysts are thinking that China is going to turn around and Alibaba is going to see a big boost in their net income. What this ultimately tells me is that analysts are expecting that China and Alibaba will recover over the next couple of years. And that's not the problem with Alibaba's stock price. The problem with its stock price is the valuation that investors are putting on the company. Right now, their PE ratio based off these numbers is sitting at a 9.64. If we assume that they should be trading at a 17.5 forward P ratio, that means that the stock price should be trading at $137.15. So ultimately, as long as Alibaba keeps putting up consistent numbers and we don't see massive fluctuations, the stock price is likely not to fall much further. The question is really, when will investor sentiment around China and around Alibaba start to improve? And that's a question that no one can answer. For me personally, I'm paying attention to Alibaba's numbers, making sure there is nothing that is overly concerning, any big changes in their business model that could really drive the stock down on a fundamental basis. However, I think the biggest thing to drive the stock up is we need to see a flip in the sentiment around China. And I don't think this year will be the year. I think that with it being an election year, a lot of investors will hold off on buying into foreign countries because of how different policies could come into play based off who is elected. Keep in mind that I do own shares of Alibaba, so don't buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do you call a cold puppy? Check the comments down below for the answer. Thanks for watching.